This is Paul Donovan from UBS's Global Economics Department. Comrade Paulson has given more details of his plan to socialize the debt problems of the United States. In some ways, it is broader than before. Non-US institutions now appear eligible to participate. The US government can also set up pretty much whatever agency it wishes, and it can buy whatever assets it wants, with appropriate consultation with the Fed chairman, of course. The focus of the language is on the mortgage sector, which has raised some concern. There is leverage outside of mortgages, and although there are more than enough loopholes in the legislation to allow an extension, it is not explicitly injecting capital directly into the banking sector. Whatever the final picture, the government plan should contribute to the stability of the financial system. What is important to stress, however, is that the economic damage of the credit crisis has already been done. It could have been made a whole lot worse, absent any kind of bailout, but it is still bad enough. Bank balance sheet repair is only half of the issue in economic terms. We also need to see borrower balance sheet repair, which effectively means a process of deleveraging from consumers in the United States and small businesses in Europe. That deleveraging process is inevitable, and it is negative for growth. We expect global growth to remain below trend until the process is complete. Meanwhile, in Europe, the European Central Bank is pursuing a pro-cyclical monetary policy, in current circumstances, policy error. Although there are liquidity injections, the ECB is making balance sheet repair harder to achieve and thus prolonging the economic downturn. We expect little real economic reaction from the ECB to the current crisis, though we do expect them to play their part in terms of financial system support. For Asia, the events of the past week should reinforce the idea that a global slowdown is indeed happening, and it will have implications for the region. Asia cannot ignore the 70% of the world economy that makes up the OECD. Perhaps more importantly, the role Asia plays in financing the US current account deficit will be brought to the fore. The United States will obviously be raising its fiscal deficit and debt levels. As such, it will need to attract money from abroad to the extent that this deficit is not replacing a private sector deficit. If foreigners are willing to increase their funding of the US position, the dollar will remain supported. If they are not willing, the dollar obviously weakens. Meanwhile, the broker-dealer is no more. Goldman Sachs and Morgan Stanley both became banks in the United States last night, following an application to the Federal Reserve. Denmark has offered support to EBH Bank, the second financial institution in Denmark to receive assistance during the crisis. And finally, the head of the UK's FSA has admitted that short selling was nothing to do with the problems of the financial markets. Of course, he has not rescinded the restrictions on short selling. The Australian authorities have broadened their ban on the practice. That's all for today. Have a good day.